Hey, welcome to your virtual classroom. I am your teacher, Mr. Matuka, and we are doing accounting. Okay, so now we're on chapter 14. Chapter 14 is all about uncollectible accounts. So we've dealt with accounts receivable, and up to this point, we just assumed anytime someone said they were going to pay us, they would pay us. But what happens when they don't pay us? Well, that's when uncollectible accounts come into play. And sometimes we take out what is called a notes payable. We're going to get into this later. And we don't pay that back. So, those are some things that have to be taken care of in accounting. So first things first, let's open up our Mind Tap and let's get started. So I'm going to go down to my little Chrome here. I already had it basically up. We're going to log into Schoology, because that's where everything is located. And I feel like you guys are extra close today. Let me push you away just a little bit. We need some social distancing in this piece. All right, so go to my courses, of course. We're going to go to accounting. When we get to accounting, there's our Mind Tab link. Let's go to Mind Tab link. Good. Once we get to Mind Tab, remember, it's the second word that you have to click on to actually get to the link. Let's log in. Luckily, my stuff is still remembered. And let's launch the course. Here's the course, and we are good to go. I got to fly through this again. I think there's like a 10-minute time limit on this video casting, so got to make sure we get through all of this. As always, we're going to go up to our icon that allows us to see our outline. We're in part 2. We're on chapter 14, accounting for uncollectible accounts. Oh, we're going to go all the way down to the bottom where we go to the end of lesson review. That's where our work together is located. Let's go working papers 14-1. See what it says. First time looking at it, so I may make some mistakes. Be patient with me. You know how that goes. All right, 14-1 work together. Let's give it a look. It says the aging of accounts receivable for Brett Company as of December 31st of the current year and estimated percentages of uncollectible accounts by age group and presented in the table below. Calculate the estimate of uncollectible accounts expense. The balance of allowance for uncollectible accounts on December 31st before the adjusting entries recorded is $236.89. All right, so what they do with the aging of accounts, you realize they take it by dates. Of course, we have an age group that's current. I mean, it just happened. You have an age group that's 1 day to 30 days late, or not even late, but just that old. 31 to 60 days old, and 61 to 90% and to 90 days old. And then to the right, you see a percentage of that amount that you write off as uncollectible. So current information, we think we're going to get 98% of our current billing, so we'll only take off 2%. So on and so forth. So this is nothing more than some simple multiplication. I think we can get that done. Let me pull up a calculator. Go to my applications. There's the calculator. Good deal. Let me minimize that. I'm going to pull it down into my space. So we have $16,485.18 times 0.02, because that's what 2% equals. So that should be $329. And what was the rest of my amount? And 70 cents. All right, so the next number in a similar fashion, you know what? I'm just going to move this over so my calculator doesn't keep disappearing on me. Put my calculator to the right. Here it is. All right, so we got a $12,489.05 times 0.04, because after 1 to 30 days, we only think we're going to get 96% of that amount back. So that's $499.56. $499.56. The second part, we have 6,000. Oops. 6,009. You know what? My site is going bad. I need to make this bigger because I am guessing on these numbers. There we go. 6,958.18. We only think we're going to see 92% of that, so 0.08 is what we're going to not be able to collect, which is 556.65 cents. Good. Notice how much we jump at the 61 to 90 day uncollectible account. We really believe once we get to that number, folks are not going to pay their bill back. And hey, that noise in the background, see, I can't do two things at once. My uncles are over here. My wife decided to tear up our floor, and now we're putting a new floor in. Heck of a time to do it if you ask me, but what else we got better to do? So if you hear some noises like that drill in the background, it is what it is. I apologize. All right, $843.64. $843.64. And then our last amount, if it's over 90 days due, we believe 70% of that amount won't be collectible. That is absolutely crazy. That's $3,157.10 times 0.7, because that's what 70% is as a decimal. Wow, we're expecting to write off $2,209.97. We need to add all those together real quick to get our total. So the $2,209.97 plus 843.64 plus 556.65 plus 499.56 plus 329.7 equals $4,439.52. All right. So that's how much we believe is uncollectible. Current balance of allowance for uncollectible accounts. That might be a number given to us before adjusting entries recorded. The balance of the allowance for uncollectible accounts on December 31st before the adjusting entries recorded is $236.89. So we're going to put that number in there, $236.89. And then the estimated addition to the allowance for uncollectible accounts is going to be the addition of these two. So let's just add that in, plus 236.89. And that should equal 46.76.41 cents. Let's give that a look. That everything. Let's grade step one. Let's go back, see what we know. Good. And you know what? I added those two numbers, and I should have subtracted those two numbers. We already had $236.89 in the allowance for uncollectible accounts. So we don't need that amount. It's almost like your petty cash, right? We already got this amount of petty cash. How much more do we need to add to it? So that should have been subtraction. So if we subtract those two numbers, 4439.52 minus 236.89, you get 4202.63, and that's what that number should be, 4202.63. So get that part. My mistake. Apologize. Remember, we're subtracting because there's already an amount in there. Let's go on to the next step. So now we have to journalize this adjusting entry. We're creating an entry into our allowance for uncollectible accounts. And so what does that look like? What accounts are we using? Let's take a look at it. So again, adjusting entries are the difference between what we started with and what we end up having. So in the beginning, we had that trial balance, and we initially had an account called uncollectible accounts. And now we have to make it an expense. So whenever we're dealing with an expense, the first thing is to deal with the expense. Notice the titling here, adjusting entries. We want to be sure that we have our adjusting entries at the top. It's right here. As always, we're just going to put in our date. They give us the date. It's December 31st. We're going to do uncollectible accounts expense. And if you ever get confused on which accounts you should be dealing with, hey, just go to your chart of accounts and give it a look. So uncollectible accounts expenses right here. And then there has to be some type of asset, some payable that we're going to leave the money in. And looking up here, Accounts payable. Where is it? Maybe it's in the equity. There it is. Allowance for uncollectible accounts. So let's go back down. Allowance for uncollectible accounts. Good. The amount that we're dealing with is the adjusting amount, right? So that's the difference between the two. Where are those amounts at? Where is it? So I'm going, oh, aging of account schedule. There we go. So that amount is $4,202 and $2.63. So debits for the first one, $4,202.63. Yeah, and 4,000. Our debits have to equal our credits, so that makes sense. 63 cents. Documentation number. Where are we getting this information from? It's an adjusting entry, so nothing. I think they just want a check mark here, and we're not going to be posting that anywhere. Do we put a check mark? I'm not sure what's going to go here. Let's see. That's the interest balance and credit. You know, when in doubt, let's go back to our Mind tab instructions, and I would go to a previous page I would have open. There it is, and they left it blank. So here's the situation. Let's take a quick look. Leave it blank. That looks good. We're going to hit grade final steps, see how we did. Let's go down. Absolutely perfect. Full points. Hey, that's chapter 14, first section. Let me regroup and we'll go on to work together 14-2. Hey, have fun and keep learning.